the 14th of August in 2023. Glad you could be here. What's happening on this Monday? Well, Monday is generally a bit of a slow old week starter. But guess what? We've got to start the week, right? So let's start on the Monday. Goodness me. I'll begin by going to gold, I think, as always, and see what's happening there in terms of a tradable breakout into London session. Let me just enter a couple of things here. I've lost my participant view. That's a bit of a worry. Won't you tick, guys? Just getting sorted. There we go. Now I can see everyone. The whole three of us who are in the room at the moment. Okay, that's all good. YouTube streaming, is that all working well? Let me just check that. How was your weekend, guys? Hopefully up to standard or even better. Good. How was your weekend, guys? Thanks, Wayne. Not bad, Catherine. That's good. Good. Mine was, good because the Matildas won. What am I talking about? Women's Soccer World Cup or Football World Cup. Yeah, it was, wow, very tense. Very, very tense game, I've got to tell you. Right, gold. What are we doing today? We've got opening of Asia session. So the low of the range is currently here. And the high of the range is currently there. So we're in a good position as far as where price is prior to London session. Bit of resistance going on there and a untested daily pivot. Well, yeah, I'm very well, Catherine, thanks. I wouldn't like to be going long here, I've got to say. But there is a bit of a double bottom, so there's a potential push to the upside. Fair bit of resistance to get through, though. And bang on the bang on the daily pivot. Or I can see a break and retest, then go. Maybe a higher low in here. Anyway, we're also going short at the support level. Wow, this is a recipe for disaster. So I'm actually not going to take the trade, guys. I think either way we go is fraught with danger. Daily pivot untested here at a former support level, obvious resistance, confluence of trade line. And down below, we've got, wow, a whole bunch of a whole bunch of support under here. And we're pretty much bang on my next take profit level, if I'm not wrong. Getting very close anyway at 1904. Where are we currently? 1910 or something? 1912. Okay. We got to 1930. We got to 1910 this morning. Looking for more downside, obviously, for my trades, but I'm simply not going to take that position on a Monday, trading into resistance and trading into support. No, it's just no, not going to do it. So let's forget about gold on the breakout for today. How did it go last Friday? Well, it would have been a winner, wouldn't it? Where's 9? 9 o'clock candle is there. So same thing, you would have gone long here. Depends how that candle formed, eh? Don't know if it hit DR1 or otherwise. So question mark on that one, don't know. That one would have been a clear winner on Thursday. On Wednesday, the high at 0900 was there. So that was a clear winner on Wednesday. Looks like a clear, or is it? Let's just, yeah, it would have been. There's your high of the range. It's a clear winner on Tuesday. And on Monday, which we didn't take the trade on Monday, did we? The high is there. So that would have been a winner as well. You would have had to endure a little bit of pain during this news candle by the look of it, but not too bad. I counted 4 winners then and no losers. No losers. Maybe one. Yeah, depends how the candle was formed. All right, so no trade today. We'll monitor that, of course, throughout the week and see how it goes. And hopefully, for those of you in the gold trade still, my gold trade this is the 4th week we've been in that trade, I think. Let's have a look at that. I'll get rid of these lines that I've put on the chart, depicting today's range. And that remains my target, 1904. When I say my target's actually down here. But this would be the next take profit or trail spot at 1904. So nothing to do there. That all looks to be going quite well, and we're about $7.50 away from taking profit again on that one. Silver, don't really like the way it's leaking down here. It's just a little dribble, isn't it? It's really not a whole lot of movement. We didn't get a decent retracement either. Haven't really had a decent retracement yet. But that said, we have retested this level here. We haven't really retested the breakout level, which at some stage will be the case. And that's why I want to get out of silver. When it hits this level, it'll be a complete take the rest of the trade off at 22.10. And the reason for that is because I think there's a strong support level through here, and we will have hit the bottom of the current market structure, which is this pennant formation or equilateral triangle, call it what you want. I call it a pennant, and for that reason, I just want to be out. Should it break and retest these lows and the trade line at that confluence area, then I might get back in. But if we hit our target here, which is, as I say, 22.10, I think that's enough for me for this trade. Not so much gold. I think gold's got a far better prospect of getting to a lot lower level. But I think this one will rebound or reverb in here a little bit. They're the only two on last week's trading, which go back about 3 weeks. I don't think we got triggered into anything last week. This week, I've got one order in the market currently, and it is euro versus the CAD on the weekly chart. Now, this might take a little bit of explaining, I've got to tell you, because it's a little bit convoluted, but let's simplify it as much as we possibly can. So when I look at the big picture, here's where the convolution comes in, if that's a word, because I can see a very clear false break of this trade line. If I go a little bit wider, you'll see where that trade line's coming from. On the flip side of that, what's actually ruling or governing this currency pair at the moment? And I've got to go back to the triple top, if you like, or quadruple top, or even double top, if you're not convinced that those are tops in the same vicinity. Okay. Since then, we've had a bit of a hodgepodge of price action. But the most relevant one to my mind is this big downside that I've got to say, fortunately enough, we managed to catch. There were some beautiful entries in here. Lower high off the double top, break and retest of the trade line. And that's why I think this one's interesting. It's because of that trade line, which produced that second phase, if you like, of the reversal once EuroCAD did get going back in 2020-21. So now we've come back above that, and that did set up as a false break of that trade line, my classic false break setup, which is break, consolidate, re-entry, retest. So that bar eminently tradable, in my humble opinion. That's 3 months ago now. And since that time, we've remained below the trade line. That to me is, I would say, cancelling or invalidating the false break, because it still could happen. But it tends to suggest to me that it hasn't happened and therefore may be delayed. It hasn't happened, and this is proof of that for mine, where we've broken back below. Obviously, that was the retest bar. We spent a little bit of time here, and it looked as though that may well play out. The false break, that is. So entry there, stop loss probably would have had to go underneath there. But it didn't. It's actually failed at this point and failed to get back above the trade line, which to my mind, in the world of Jeff, is if A doesn't happen or X doesn't happen, then Y generally will. So if X being the false break and continuation of this trend, if it's a trend, certainly a gut reaction or a reaction over a period of months, V-shaped recovery, call it what you want. But at this point in time, that has failed to play out. So for that reason, I think downside is still the way I would prefer to go until that does play out. That brings me back to the weekly chart, which we saw, 3 months ago. Price come back off after this big V-shaped recovery and now gone really into a rangy area. Now that range that I've isolated here is an ascending channel. Yes, it's convoluted. It's broken false once, false twice. If that's the range in there, it's tighter than it's actually done it 3 times, which is 3 amigos. I told you this was a long story, right? And since that time, and if you want to call that an evening star, well and good. If you want to call it a ring high, don't care what you call it. It is a recognised reversal pattern. And on the back of that, we've had a lower high. So the way I look at this chart, I hope you can still hear me because I can hear some disconnects going on in my ear rolls. That could well be the next lower high. No, we didn't get a lower low, but we have come back or snuck back inside that market structure that I see. So the weekly chart, whilst it's not giving me a classic game changer bar in that we haven't really closed near the low, it's more of a spinning top than anything else. It is giving me the opportunity, because price is away from our entry, to get some acceleration through the bottom of that candle if price does not go long. If it goes long, it doesn't matter. So I put my entry underneath the bar. I put my stop loss above it. We've got the confluence of resistance here. We're underneath both of those. We're underneath the weekly pivot, and we've got a clear take profit area just above the monthly pivot. So that's the trade, guys. If you wanted to follow it, I thought I had the parameters on the chart. In fact, I did. When was it there? Yeah. If you want to follow it, 1.4674 is my entry level, and I'm taking my first profit at 1.4591. I'll just remove a third of the position at that point, and another third if we hit that bottom of that channel. Stop loss 1.48018. Why 0.8? Well, because that's the default on the market scanner. That's why. No other reason. And I'm getting lazy in my old age. It's far easier to trade on the market scanner than it is to put the manual levels in. That's not always the case, certainly not on smaller time frames. Why? Well, on smaller time frames, you've got spreads to contend with, and you haven't got a whole lot of stop loss available to you. So I need exact levels in there on the smaller time frames, but the weekly and the daily, not so much. And this is a weekly trade. So trading that bar there on euro versus the CAD. It's the only thing that caught my eye this morning, I've got to say. There were only 2 game changer bars. One was CAD yen, and it was barely a game changer bar. The low of this one's barely lower than the low of that one, but it is. And it's suggesting that we buy CAD versus the yen. Not against the directional bias, most definitely. Who would be with the yen as weak as fizzy drink? But, and there is a but, trading at this level is not something that I like to do. In fact, it's something I don't do. And it's too close to the highs for mine. So directional bias, tick. Entry level, cross, no thanks. The other one is euro versus the dollar. Now, this is pretty much exactly the same thing. Directional bias tick, entry level, cross. Why? Well, the main reason, well, actually, I'll go a little bit wider again. Yes, we've got this wonderful monthly false break scenario, which if I go back to the euro versus the CAD, it's exactly the same thing, right? I'll go back to the euro versus the CAD. Take that middle picture where we've come underneath the trade line, we've come back above it, and we've retested it with one bar up, one bar back. Euro versus the CAD. Let me go a bit wider and go to the monthly chart, sorry. Break below, back above, retest, exactly the same setup, right? So I'm bullish euro versus the dollar on the bigger time frame. I'm also bullish euro versus the CAD on the bigger time frame, but that hasn't played out yet, as I said. Euro versus the dollar on the monthly chart has actually broken above that level, right? So we did get entered on that position, and it's yet to prove itself as to whether it will, in fact, convert into some money. But we're still on this trade line, whereas with Euro CAD, we're below it and we've retested it. So there's the difference. I did want to point out, because you'd be thinking, hang on a minute, he's just said one thing and he's saying completely the opposite. Not really, just comparing timeframes. So on the daily chart with euro versus the dollar, on the weekly chart, euro versus the dollar, I've got this market structure, which is completely different to the market structure, illustrating to me a false break. The false break can still play out, no problem at all, as well as this one playing out. In other words, price can come down to here, continue in that vein for 6 months, 12 months, 100 years, and that monthly structure of false break can still play out. So what am I thinking? I'm thinking euro dollar goes to here before it goes anywhere else. Well, why don't I trade the weekly game changer bar then? Well, for the simple reason that we've got that particular problem, which is that line that I showed you on the monthly chart, and it doesn't know where to go at the moment. So we've got no indication right now which way this is headed until we go to the daily chart. And if I go a little bit wider on the daily chart, we're actually in a trend, right? High highs, high lows, a little bit of a hiccup there, but higher high, potential higher low. So do I actually buck the trend here and go short? Or do I respect that support level and wait my turn until I can trade to that level, getting profit in the bank? And the answer to me is pretty obvious. I don't want to trade at support. I don't want to trade short at support. I want to trade short at resistance. So that's why I'm not going with the euro dollar short at this point. That doesn't mean I won't later in the week at all. That's completely on the cards, because this is the market structure that I'm following. And at the moment, I'm looking for downside to here. I'm just not willing to trade at that level. Daily chart picks me back up to here and gives me a false break, and I can take profit before here. Happy days. 4-hour chart, exactly the same. I told you they were convoluted, but there you go. That's pretty much all I'm seeing at the moment in the market. Everything else is telling me dollar strength may continue, and that's on the back of, once again, this range that we've been talking about for the longest time, this one here, which actually looked like it was going in the opposite direction. Now I've got a channel that's formed, and we're getting near to the top of that. I think this is a really, really tough one. That channel's coming through here somewhere. So I think there's still upside in the dollar, but I think it's going to take some twists and turns before we actually get this to play out in any, let's say long-term price action. Long term, this is very, very obvious to me that this has come off this high, come back underneath into the channel, and we're headed low. So over time, I'm on a monthly chart here, don't forget, this could take till 2097 to actually happen. I won't be here, but just remember I said that, right? I'm absolutely bearish US dollar, but that doesn't mean I am bearish today. I still think this has got room to move to the upside. So what am I saying? I'm saying that the big picture on a lot of these currency pairs and indeed the indices that I'm looking at are telling me one thing long term and something completely different intermediate and short term. Pick your poison. It's either stick with the long term and trade nothing else, or be willing to trade against the big picture on the smaller time frames. I'm more than willing to do that, but I've just got to have that evidence there that everything has reversed from the norm or from the momentum. And you probably all know what that means in my book. That means if we're at resistance, double tops or the like, and lower highs, or flat support, double bottoms and the like, and higher lows. There you go. That's my formula for the week, and really it's my formula just about every week anyway. I think we've got Ash in the room. G'day, mate.
We do. Didn't forget today, mate.
Good man.
Yeah, doing well, mate. Doing well.
That's the point. You did forget one thing. We were going to catch up earlier, but that's all right.
Oh, sorry, mate. Yeah, we were, weren't we? I did forget that.
There you go. At least you forgot something.
Okay, we'll rearrange. I don't know whether you want to do it after or whether you want to do it tomorrow.
Yeah, tomorrow's probably good.
Okay. Right. So we've got. I think.
What's on your radar?
Well, there's a few things actually. I mean, I'll tell you what I'm really looking out for right now is this Aussie yen, which I am very, very close to taking. I like the pivot is really where I'd like to take it. This is a short for me.
Yep.
Now, if I think about the market sentiment, I have got one trade on at the minute in the Nasdaq, so I'm short on the Nasdaq. And until this really starts to turn around, I think the Nasdaq is probably in near enough a buy zone. It might have a little bit further to come down, but I think this may well get a boost to the upside. So I'm not sure how much longer I'll be in this trade, but until it really breaks this level here, which is the daily pivot, I think we're it's all right. I'll stick with it until that point, until I see some signs and signals of reversal. I'll stick with the downside because there's some weak sentiment. Now this brings me to talking of weak sentiment, the Aussie yen. And I'd like to get the Aussie yen short, and I'd really like it at this pivot. I like it just to push up just a little bit further and then take the short on. It could be a longer term trade. When you look at this on the dailies, we can see that this has been trending lower. It managed to get a little bit of support here, but it's really, these are lower lows and lower highs. So I like this, but I really like this trend line, because when we look at the trend line, the price is on top of it, is right on top of that particular point there. But if you have a look at this on some other ones here, now look at this one here, because I think this is better, this particular point here. So I like this trend line, because if it breaks, then we can see some downside. This one to me looks like it has already broken, and it looks like we retested the monthly pivot and we're down, suggesting that maybe the best place for a stop is up here. I mean, yes, you could trade this on you were just discussing long term, short term. But what, if I look at this on the longer term, just to make sure I can make enough profit out of this, if it's going to go, then the channel to me looks like it may well be something in this zone here. I think this is probably the channel. I think that there's it's there. It might be a little bit lower. It might be there. Let's go with the conservative, just so we're not overstretching here, but it's somewhere in these areas. That looks like a little bit of a false break to the upside, but I like these touches here. So that looks to me like the channel. And again, you look at this, that does actually look like it's below the area as well. So measuring, this would suggest that this area here is probably a decent target. And I like this area because we've got this support zone here, we got this support zone here, support zone here. So if this was the target, then we're probably looking at, currently, we're looking at a 2-to-1. If we get a little bit of a push higher, it'd be slightly better than that. So over the long term, I quite like that. The problem always with trading against the yen is are the swaps, and that's I want this one to play out really over the next couple of days, because I don't have to sort of eat away the profit with swaps. The possible driver is GDP for Japan. We got loads of we got a slew of CPIs and stuff like that this week, but we are seeing some market weakness. So I'm just looking to see whether there is a possibility of this. Now, of course, if you want to take a trade which is much more lucrative, you could just trade this and see what's the 2-to-1. You know, if you're going to be sort of like trading this in the short term, which in some respects, as I say, is maybe a bit more attractive because of the swaps. But if you're taking that 30 up, you know, that's pretty good to the downside. So if this did play out over the day down here, that would be okay. If it takes a couple of days, then I wonder whether if we're going to get a couple of days because of GDP numbers from Japan overnight anyway, I wonder whether the dailies you know, may well give us some follow through and possibly even get us down here. That does look like a bit of a, yeah, it looks like around about a, well, it's a 300 pips, 300 pip move to the downside, which is going to be over a 3% move, which is quite big, I suppose, for a day. But you just never know, mate. So I am going to take the trade, and how I manage it initially is going to be with stops up here, but I'll put on a full quota with the stops up here, you know, a full quota of allocated cash up here. And then if things do start to move, I may well just start to move the stop to the downside. So I'll see what happens, but I like this one, and I think, you know, as I say, one of the reasons I do like it is because of market sentiment. Market sentiment.
I was going to say it does appear to be a little bit risk off, doesn't it?
Yeah. Just generally, you know, we've got this kind of risk off spirit in the market right now. As I say, that the Nasdaq is kind of showing us that, and the Nasdaq and the Aussie yen does tend to be a pretty good proxy when it comes down to a currency pair that expresses it as well. So so I like this, and I'm pretty close to kind of taking this one on around about another 5 pips, and I'll look to get into this. The other thing is the kind of seasonal bias also pushes us towards strong yen and maybe weaker Aussie, weaker Kiwi. So so we are looking at
Kiwi has been weak, eh?
Oh, the Kiwi's in all sorts of trouble, mate. I tried to take on a Kiwi Swiss last week and have been absolutely hammered on it. And I think your levels are starting to look a lot more likely now. We push to another leg to the downside. So we may well be looking at all the way down here with this with the Kiwi Swiss, and it's still got a little ways to go, another couple hundred pips to the downside, but you know, I wonder whether that does continue to push to the downside. The Swiss just looks
fundamental reason driving that.
Well, if you look across the board of these the commodity currencies, you know, if you look at the CAD, dollar CAD is you know, pushing to the upside with the commodities. The Aussie CAD pushing to the downside, and the Kiwi dollar pushing to the downside as well. So the commodity currencies just aren't doing particularly well. I think the relationship with China probably plays worse into the likes of the Kiwi and the Aussie, which is another reason that the Aussie for me is a bit of a screaming short. I'm just gonna make sure I don't miss this trade. Yeah, make sure. So the Aussie does look like a screaming short, and because of that that situation with what's going on with China, because of the relationship in you know, between the Australian economy and the Chinese economy, and we're seeing lots of red flags and lots of signals over in that particular region, which just suggest there's problems. You know, there's big problems. Right, let me just double check this on a 5 minute.
You need time?
No, it's okay. I think I can probably just I can probably take this one on. I'm going to do it on this one here.
Harry, Swiss yen all-time high. Yes. What's that mean to you?
What's that? The Swissy yen? Yeah. Well, that's another one. Yeah. Absolutely amazing. The Swissy yen pushing to those particular levels. It's yeah, it's astonishing, mate. It's absolutely astonishing what's been going on with the Swissy over the course of the last few months. You know, continues to push the upside. Obviously, there's incredible confidence out there with the Swissy, and yeah, if we look at the Swissy yen on the longer term time frame, it's just amazing. Amazing what's happened here, but right across the board, you know, the Swissy against everything. CAD Swiss, another one, just can't catch a bid at all.
Nope.
But I'm looking at. I wonder whether if we see that Kiwi turn, we see the Kiwi Swiss turn, then we can start getting into some of these other positions against the Swissy, because I like the CAD Swiss as a long. I quite like the Euro Swiss, the dollar Swiss is along as well. In fact, there's lots of them that I like against the Swissy as along, but they're just not coming to fruition. So yeah, I am interested in looking for Swissy short, purely because of the sell-off. You know, not that the fund, you know, almost forget the fundamentals. It's purely because of the sell-off I'm interested.
Yeah, I was going to say that my question to Harry was, what does that mean to you? Swissy yen at an all-time high. To me, it means stand by to go short.
Yeah, yeah, I would say, mate. I would say the same thing. Okay, let's just see how far away we are from. Well, we're about 6 pips, so maybe a couple more pips. Let's see if we can get in at 93s on this one. A little bit of a push to the upside, and we'll see if we can get. There we go. That'll do us. Okay, so I am short on this one, and I'm just going to put my stops just in this area here. We'll put the stops up there, mate, and see what gives, see how this plays out. Now, the reason I've taken it maybe a little bit early is because if I look at this 5-minute chart here, it's just had a little bit of a retracement. It's likely to test this area and then maybe kind of have one more push, but this is the zone, and you know we're looking at a 5-minute chart now. So if you look at this on a 4 hourly, it doesn't look like there's a lot of room there. So so I'm happy to take this and then take my eyes off it and not have to worry about talking and trading at the same time. So we are in short on the Aussie yen, mate.
Awesome, mate. And talking as you were about 5-minute charts, we've got the doyen of 5-minute charts in the room.
Oh, doyen.
Yes. Hello, George.
Doyen.
Who could read Prince?
And see if I can spell it correctly first.
There was a famous horse called Doyen, wasn't there? Oh, you must know about him, Jeff.
Oh, is he one that went fast? We don't know anything about ones that went fast.
He was fast. He was fast. Not the best horse. Horse. Yeah, go on.
I was trying to think of a word that rhymed with doyen. So, George, you're not without reason to look at Google, because I've got absolutely no word that even comes close.
I have, but it's not particularly.
It's not trader friendly.
No, it's not trader or listener friendly. So
I'll think of one that's suitable to this time frame and YouTube.
Oh, what you talking about the 5-minute? Yeah, okay, yeah. All right, short-term time frames, doyen.
Yeah, all that.
Okay, all right.
So, George, you're free to talk, mate. There you go.
Well, you know what's interesting, which is probably gonna shake your mind frames a bit, is a complete shift in the way that I manage my trading day.
Okay.
Yeah, as you've all known for a long time now, I've spoken about getting up at 2:45, 2:30 a.m. my time to trade Hang Seng, morning session, and then stay through for the day. Now the chickens basically came home to roost. Health
Well,
wise,
they get up at that time of day. It's not for humans, you know.
it's for them genetically correct, but I hit what did my doctor say? Oh, he basically says, listen, buddy, is everything all right with you? And I said, yeah. He said, but you're exhausted, your stress levels, etc., etc. And when we got down to it, he just says, mate, you've got a choice. Either you're going to keep working these 18-hour days of yours, or you're going to have to shift. Something has to change. I've been on cholesterol medication forever, but he got a bit concerned.
George, I think that's really it's a really interesting and poignant point, because the problem is trading is aside from anything else, it's very difficult. Nobody can control their emotions, and I know we always talk about control your emotions, but you can't really do that. But you can control how you feed those emotions.
Yes,
and
expose them.
expose them, yeah. And I think what you're saying is really interesting, because actually trader burnout is probably the worst thing that can happen. And yeah, trying to get to the point where, and I was thinking this actually, I was thinking of you the other day, mate, because I was thinking about the spikes and the randomness that we kind of get in markets. And of course, the longer the time frame, the less that is prevalent. So short-term time frames, 5-minute charts and stuff like that, they're all over the place, meaning that the focus that you have to have and the patience and everything else that you have to have during those long periods where you're looking at charts for all that time just to wait for that 1 5-minute opportunity must be incredibly draining. And getting up early and putting yourself in a position where you're also having to battle tiredness, it's undoubtedly it makes sense to kind of change things around and not cause yourself burnout, because it's that kind of industry, isn't it? You either you either go in hard, try and make the money as fast as possible, and then just leave the industry, I suppose, or you try and manage the kind of the marathon that is trading.
It's like you had one of these spy cameras in the in the rooms. It's exactly that. I mean, and it creeps up on you. And I've been known on record to continually say that I'm always focused. I'm up early. I can manage it. I go through then the UK session, US session, etc. But it builds up. It builds up. And I hit that level. That's something I had to give. So I have completely dropped waking up early. So I'm no longer trading Hang Seng. Just dropped it completely. And I really had to force myself to try and find a market I can trade within a reasonable time frame, from 8 to 4 p.m., 5 p.m. and then be done with it. So I've started looking at the German 30, that's 30 actually, is the market I want to make the primary market to look at. And it's fresh. I just spent last week and the weekend just going through charts of it, just to get into the rhythm of it. So it's still early days. I mean, I'm looking at now, there's nothing that I'm going to call at the moment on it. But, in terms of goals as well, it's quite fascinating what you just mentioned. I mean, one of the things I've set as a goal for myself is at a point in time to start transitioning to higher time frames to manage these emotions. Because I've done it for some, I don't notice it. But, when your health is out there and flags for your health, then you do something pretty quickly. So short term, probably the next few months, still just be in dark steady. But I'm gonna start trying to see how I can go to longer time frames, because then you can add, like you guys, add a few more charts to it, right? Instead of just one.
I agree, mate. Do you know what? I think that what we know about charts is that you could throw up a chart of any time frame and ask a professional trader what time frame it's on, and they wouldn't have a clue, as long as you don't put the the time frames on. And that's because in the end, they all look the same, and they all do the same thing, as in they find support and they find resistance. So so being able to kind of transition to longer term timeframes, I think is relatively simple. And this is something obviously Jeff's done in recent times. I think that the difficulty is the mindset of having to hold on. You know, it's the profit taking which becomes harder. The analysis of where you get in is the same, and the analysis where you get out is the same as well. But it's the ability to be able to, you know, hold on to the market and walk away and allow the trades to play out. That's the transition that I found the most tricky.
I'll tell you what helps with that. Just really, really basic stuff that helps with that, and that is, if you're getting positive swaps, it's a whole lot easier than if you're getting negative swaps.
Totally.
A whole lot easier.
Yeah. Actually, just on that, can I just interject here, mate? Because
of course.
This is actually a really important point. So for everybody in the room, positive and negative swaps are very easy to find. You know, so when you look at your trades, you'll take your trades and you'll see at the end of the day that that there are swaps that are either paid or taken away from you. And this is what I was saying about the Aussie yen. The Aussie yen's going to kill me if I have to hold on to it for too long, because the swaps just become problematic. Now, the way that you can find out about positive and negative swaps, and this is why indexes are actually really good things to short, because they pay positive swaps. But the way you can find it, if you go to your market watch window and right click and then go to symbols here, then it brings up the list of all the majors and minors. Now, if I click on, I don't know, let's go with the Aussie yen. I think it's going to be in the FX. Here we go, Aussie yen. Now, if I go to properties, what I can see now is the different things here. And I see swap type, inputs. Look at this, swap short, -15. This is in pips. -15, swaps long, +7. So this is how you can see whether you're going to be in positive or negative swaps when you're sort of trading. So just a little thing for everybody in the room. That's the quickest way anyway to have a look at positive and negative swaps.
Yeah, look, and apart from the fact that it's obviously better to be getting money in your bank every day than not, it messes with my head big time.
Oh, I hate it.
If I'm in a negative swap situation on a currency pair, or doesn't matter what it is, that's doing absolutely nothing, and therefore you tend to go, well, okay, this is costing me money to stay here, I'll get out. And guess what happens straight after that? It goes completely in your direction for 100,000 pips. Well, maybe not 100,000, but you know what I mean.
Mate? Yeah, do you know that the other danger, of course, is to look for the trades that are just in positive swaps, which is what I did with the Kiwi Swiss. I was like, I'm just holding it. I'm no problem at all. And I had it for about 3 days. And I got, I don't know, a little bit.
It's still analysis first.
Oh, exactly. Yeah, I got battered in the end. It didn't. The swap differential didn't make up for the loss in the trade. So it doesn't kind of equate to just because they're positive swaps you should go long or short.
Don't do that. No.
Yeah, but it does make it easier to hold, which is what, one of the things about the NASDAQ, one of the reasons I am quite happy to hold the NASDAQ is I'm getting positive swaps. You sell the NASDAQ, it's positive. You sell an index, it's positive swaps. You get paid, and just to kind of
I'm enjoying it at the moment. I've been in for 4 weeks now on gold and silver, so I'm getting paid to do that. And like I said, makes it a whole lot easier to hang there.
Well, look at this one. This is what so we can we know if Jeff can afford to buy us a lunch out or whether it's just a beer. He's getting 2.7 pips per short every day. So if he's got $1 on that, he's getting a couple of dollars a day. So how long is that going to take? So Jeff holds this for a month, then he can buy us all some lunch in Bali.
There we go. Well, I'm only a week away.
Oh, here we go. Oh, he shouldn't have told us that, mate. We'll see you next February or March, whatever it is.
Oh, shit. Rally gold, quick.
I like the Germans 50 30 though, George. I think that's a decent market to be looking at.
Yeah. I mean, thanks for that. I was looking at some stuff over the weekend. Let me just share my screen. It's not.
Yeah, it'd be great.
I was trying to look at one of the things that I do is, let's see if I can just share my screen.
I probably haven't allowed you to do that, George. Sorry, mate. I'm not very good as a controller, I can assure you.
Oh, I think you're brilliant, mate. You're brilliant. You should be in the shows when I'm in control.
I'm consistent, if nothing else. There you go, mate. I'll be away 2 seconds, by the way.
Yeah, no worries, mate.
All right, let me just pop it up. And just talking about this particular market and what I look out for, just trying to understand. So forget about all the analysis and what the different things mean. But look at this, from when the German 8 o'clock my time, so that's probably 7 o'clock your time, right? From when it opens, you had to wait 30 minutes to take the first trade. So that on that day, that was fine. But then you still have to wait from that first trade another hour and 50 minutes to find the next trade. That's almost 2 hours of waiting. So 30 minutes to the first trade, almost 2 hours to the second trade. And then all of this happens and you have to wait another 45 minutes to get to the third trade. And 15 minutes, so that's pretty quick. After that 15 minutes, another setup comes. Then while you're managing that, you're trying to find ways to get in, and you still have to wait another hour and 20 minutes to get into that trade. Okay. So, where was it? Yeah, then from there, there's still 20 minutes to wait to the 8th trade, or it was 30 minutes here to get to the 7th trade, 20 minutes, hour 40, 25 minutes, 5 hours 40. So I was just looking for setups. I've probably been out of the day somewhere around 5, 6 p.m. So probably only up to these trades. Now, the point is, and that's probably where the personal management or the stress management has to come in. Although the setups are there, but there's a lot of things that the market is throwing at you that you need to be processing. I mean, if this was a weekly chart, and Jeff could just come in and say, well, boom, there's a trade, wait a few more weeks. But on the 5 minute, hourly, quarterly, it's all processing. All happening very quickly. So this is just looking at the German 30, and kind of now I'm actively starting to look at it. And
do you know what's interesting there, George, as well, is that doing that much analysis, because you can sort of like get that many candles over a day. Were they daily slides there?
That's sorry, I've opened the wrong one. That's a daily slide, yes.
Daily slide. So I think that, the fact that you can see that many candles open over a day, actually really useful for price action analysis, isn't it? So even though you'd be trading over maybe, well, what would be the same thing? I can't even think what the breakdown is going to be. It's going to be probably about 3 months, but a bit more than that actually. If you were sort of looking at daily bars. You have done that. You've done. What's that, mate? Sorry.
No, I was trying to open PowerPoint. It won't open, but don't worry.
Oh, no worries. But you've done the sort of price action analysis on a 5 minute, so it means that you can see lots of price action and lots of these things kind of playing out, which is really useful, isn't it? Because obviously, when people are learning the daily wave rider as an example, they've got to wait a long time before they can kind of get enough bars to get their analysis. If they're forward trading, if they're not sort of back, if they're not just kind of back testing.
Yeah. So I mean, and that's pretty useful actually. If you like you said, if you ignore the time axis, so that it's a 5 minute. If you just go into and say this is the strategy that I trade.
Yeah.
Let me see how it appears, because this could be any time frame. So you get a lot
Yeah.
more practice, than trying to scroll through the whole year. And that's
Yeah.
what would be pretty useful for the guys if they want to get into that.
Yeah. Yeah. I mean,
Man, did I miss something important again, didn't I? Ducked away. Sorry about that. George was dropping some pearls there, I reckon.
Always.
By the sound of it.
I'm not sure important. I had there you go. I couldn't get back to my chart. So I was just saying, because I'm getting into German 30.
Yep.
I went through quite a few charts, about 40 slides over the weekend, just to try and get into the rhythm of it. And the things I was looking for is, based on the strategies I trade, how long would I have had to wait for that to set up? So on a 5-minute time frame, to get to the first trade, and this is the open of the DAX 30, Frankfurt. So it's like 3 minutes to the first trade, and you bang it wherever, and then there the UK market opens. But to get to that second trade, which was here, that's a whole almost 2 hours after taking the first trade. So you'd have had to wait quite a bit, and then after that, the next opportunity was 45 minutes later. And then you got
sorry, George, before you go on with that, does that mean you're sitting there for 45 minutes waiting for that setup?
That's what it.
Wow. Okay.
Well, okay. No,
so when I was trading small time frames, well, you can duck away for 2 minutes, I suppose. You can have a peep, that's about it. When I was trading what I call small time frames, 30-minute time frames, candle closes, no trade, walk away, come back 30 minutes later. But 5 minutes is not a whole lot of time to do anything else, is it?
No, there isn't. But now, so let's look at let's use which one is a pretty classic. Well, this one is not a problem, because I'm going to open in the UK markets. I try and make sure if I take any trade, three candles at least before, I'm not active. It's like going into news candle, I'm out quite a bit. But in between here, assume you take that one and whatever, you bank, whatever happens. Now you gotta wait for the next setup. When you see that, I'm not taking that, I want a little bit more information. I don't know if that's gonna come the next candle or not. So I'm literally just pacing up and down in the loop, right? Waiting for it to happen. You can walk away, which sometimes I do, and come back. So let's say you didn't take that for whatever reason, and so there could be another one. You walk away and you come back and it's there. Well, then there's nothing to do. So now you're sitting around for quite a bit. So it's I mean, there's two sides to it. For someone who's actively trading the 5 minutes, it's a lot of patience. You've got to wait. In the meanwhile, like you guys said earlier on about the emotions are there. Should I take this? Should I wait? Is this set up? Is this it? Let me wait. All of those things are taking place. And when it pops in, then you've got to execute, because if you don't execute, it's gone again, which is different to someone just saying, okay, this is a chart. I assume it was a daily chart. Where would my setups be? Because I mean, if it's a daily, and you kind of say, well, if we get a load test candle at the end of today, I'm going to put an order above here. You just come back end of the day and they will look at it. If it's not there, it's not there. So it's a different, completely different kind of dynamic. Now, I would like to transition to that, in time. Don't know whether I'll end up on the hourly for.
You'll love it, George. You'll love it. It really is like, I don't know, I won't say a weight lifted off your shoulders, but when you're so used to one thing, and with me it was 30 minutes, and for God knows how many years, I just sat in front of the 30-minute euro-dollar chart, like I've told 100 times. And it became so boring, and so, do I really want to do this tomorrow? It's like, it gets to you, and it's like a job. And for me, I've only ever had jobs that last 2 years, because I get totally bored and have to don't want to do that anymore. I'll do the next one. And I think if you continue to do that on a small time frame, you will get to that point way quicker than you will on a daily, for the obvious reasons that you just mentioned. You don't have to be there, right? So you can have a life away from the charts. And I think that's super important over time. I think in the early days, you can't replace the value of charting, live charts. I think that's irreplaceable, because it does teach you a lot about price action. But down the track, and certainly when you get to my age, you don't want to be messing around with the same old 5 minutes here, 5 minutes there. It's okay. Morning, I got it. Middle of the day, maybe I can come back and have a look, and maybe there's something on a 4-hour chart that piques my interest. But yeah, that's kind of where I'm at. So welcome to the revelation, my friend.
Thank you. Appreciate it. I'm sure you probably told me that years ago and I just didn't hear you, but now.
Well, I was more subtle than that. I was saying, how do you do this, George?
Yeah. So yes, yeah. That's definitely on the transition goals list to get there.
But if you need a transition of the mind assistance, you know where I am.
I will definitely get in touch with you. I'll definitely.
Good man.
The key thing is, going forward, my commentaries will be structured around this market, German 30.
That's okay, mate. I mean, I think it really doesn't matter. What I always love about what you do is your approach, and I don't think it really matters what the market is. I think if you can read charts, read yourself, and stick to a particular approach and format, then it's just valuable. It's just really valuable. And it's I don't know what the other thing that I find quite interesting at the minute is the almost convincing ourselves that we have nailed this stuff, because we're everything's forever evolving, and we're forever evolving, and this is the kind of almost case in point, the fact that you can't, the human body can't take waking up at crazy o'clock in the morning, staying focused, staying emotionally intact, and all these sorts of things. Then it just kind of is a reminder that we've got to stay on top, and not at any point think that we've nailed it and we've kind of got it down, because really I think the truth is, and I always think this when I ever hear about any kind of successful traders, and I'm not, it's no comment on them, because they may well realize it as well, but markets, the fact that somebody's doing well is probably just as much to do with the fact that their particular approach works in the particular environment than it is that they are a good trader, as an example, so having kind of different approaches, or recognizing when your particular way of trading is just not right for the market, is another really important aspect of it. And I guess that's another aspect of when you get tired and when you wake up early, sometimes you get lost in it. You get so lost in the fact that actually it's just, you're wondering what's going wrong, but actually it's just that it could simply be that the market dynamics aren't quite right. And I suppose where you become good at trading is when you go, I either need to switch strategies, or I say that this isn't my market, and I have to flip.
You recognize where you are, and that could be simply and utterly a family issue, a health issue, or there's 100 different reasons why you shouldn't be doing what you're doing. And as you say, the successful people will recognize that and fix it and change it.
Yeah, and be able to take some time away. Because ultimately, it's not about trading, is it? I mean, the trading is the kind of tool to enable us to enjoy what's outside, not what's in front of a screen all the time.
Yeah, and I mean that's also a key thing to work through. What do you enjoy most? Why are you doing what you're doing? And to start to make that adjustment is pretty important. So my contribution is probably more psychology today than anything else, but I hope it's useful.
It's super important, mate. It's super important. Look, to be honest, I'd much rather be out in the sunshine watering plants or something than sitting in front of the charts. But that's because I've done it for so long. So I get that when you're beginning, you and we're probably saying this to people who really want to be in front of the charts at this time. And like I said before, I don't think you can replace that experience. It has to be done. It's the yards that you have to tread. What is it? 10,000 hours? Is that?
Yeah.
That's the key, isn't it?
That's
For everything.
That's what
Yeah.
is the key. Yeah.
Yeah.
Sure.
Yeah.
God, I should be a genius.
Well, do you know, I'm trying to teach my daughter piano at the minute, and it's she just won't sit down and do it. She's terrible to sort of sit down and do it. But I did say to her about the 10,000 hours, and I said, but it's a bit disingenuous because actually you could do 10,000 bad hours and not get something, or do 1,000 brilliant hours and be way ahead. So we ended up sort of settling on, right, just 5 minutes a day. Forget half an hour a day or an hour a day or whatever. I said just 5 minutes a day, but we're doing something very specific in that 5 minutes. And I've kind of managed to convince her that that's okay. So I might still get there, but it is about the quality is the point. It's about the quality of the time spent.
Yeah, I watched a movie, I think it's about 2-3 years old, called Gifted Hands.
Yeah.
It's, I don't know if you come across about this
No.
doctor, and, did all these complex operations separating twins and stuff like that. But in there, he talks about the miracle of the brain, and he said, I didn't know about it. The Messiah by Handel was composed in only 3 weeks or something.
Oh, right.
Yeah, I didn't know that. Apparently, he's talking about the miracle of the brain. So then you kind of say, okay, there's no ways you're going to put 10,000 hours in 3 weeks, right? So I don't know what circumstances prompted Handel to dig into that brain of his to produce the Messiah. So, it's while you got to think of 10,000 hours, 10,000 good hours, 10,000 bad hours, but also you don't have to give up and say, my goodness, I don't have time to put how many years to get to that. It could just click like that. So,
Yes.
so don't be too hard on yourself,
Yes.
As a similar comparison, it took, I think, about 5 minutes to write "Achy Breaky Heart." So, if you draw a comparison, then the quality is probably better off with 10,000 hours and 5 minutes in "Achy Breaky Heart." But guess what?
Yeah.
"Achy Breaky Heart" made a shit ton of money, right?
Yeah, and it's still crap. So there's no actual correlation between quality and how much it made.
Come on, Ash, you've been there. Don't. No, I can't do it because we'll get Paul into trouble. You bopped along to it. Hey, there's me good mate Phil. How are you, buddy?
Yeah,
Hi,
pretty
Phil.
good. Not too bad. How you going, Ash? You just brought up something valid there, Jeff, about I've just learned this from experience, and you highlighted. I'm trying to think how to illustrate it. And when Ash said about teaching someone to, for example, play the piano, which I relate to, let's say, learning to fly a plane, the general attitude of your instructor is little and often, because your focus is so intense at times that you need a break. You can't go too far. So your 10,000 hours sort of, this is all relative. That's why I'm trying to paint the picture. But on the other hand, and then your comment about, a pretty rugged 10,000 hours or a brilliant 1,000, that's really valid. And I think that's part of the same reason behind it. But when you learn to, because I'm a bugger for taking on projects and I've got to see it out and perfect it. So at one stage you are learning from someone else. So your reception is different. So the speed of which you can take in the new knowledge is different. But once you get your head around it and you make it your own process, you can then focus to such an extent, like I do at times, you might go 2 days without sleep because you're in the zone and you're on a mission and your brain's taking you down a path, and you can stick it out for 4, 6, 8, 10, 12, 24 hours without a problem. Then you'll be exhausted after that, but you've been able to focus and you'll just make so much progress in that 2 days, for example, because it's in your mind. You're then teaching yourself at your rate because you've got a better understanding of the subject as opposed to learning something off someone else at the time. You understand what I'm saying or not?
Yeah.
I
think that's
think
right.
that's perfectly valid, and I think there's a I was going to say it's a condition, and it probably is a condition, but as I understand it, there's two sides of our brains. One's right, one's left, right? And sorry, one's right, one's left, correct. As I understand it, I'm a one or the other. I think it's left side of the brain type person. And to Phil's point, it wouldn't have mattered if just about any teacher I ever had at school would have sat there and written on the blackboard 100,000 times 1 point, unless I could twist that point to my level of understanding,
yes,
whether that be good, bad, or indifferent, lower or higher, it doesn't matter. But until I actually absorbed that knowledge off that blackboard, and maybe it didn't even come from the blackboard, maybe it come from the mouth of the person who was trying to teach me. But until that got absorbed into me, I might as well have just not been there. Absolutely not been there.
I'm exactly the same.
And I think a lot of people probably are. And I think it is a condition or an attribute or a characteristic. Let me put it that way. Condition's probably a bad word to use. I wonder if there's anybody in the room who recognises that, whether it is a using the left side of the brain or the right side of the brain. I know that's a thing, and I've
mate,
read it somewhere. But
it's interesting you said about this, because in my daughter's school, they reckon like 60 or 70% of the children have got ADHD. And I was talking to somebody about ADHD the other day, and that suggests to me that ADHD is the norm rather than the exception. So after that, I was thinking, okay, well, we're definitely kind of much more willing to kind of label things now than they had before, which is good. But actually, what it really should be, forget the labeling aspect to some regards, what we are starting to recognize is that we all learn differently, because there's a lot of very, very successful people with ADHD. So it doesn't really make any difference that you've got ADHD when it comes down to monitoring success. What it comes down to is understanding that we are different, and as long as we find the best way for us to learn, then we can be at the same level with somebody without something, or with something with another extreme aspect of it. So I think that's fair. I was never particularly good at reading, but you give me an audio book and I'll absorb it a lot better. So I think that you could go right the way down the scale, and I suppose our mission is to figure out what really makes us connect with a subject, and
Yes.
and then we can sort of like push forward with it, because we can probably, people are exceptional, but really, if two people can do something to a greater or lesser degree, anyone can, and it's just making sure that we tap into the correct messages that trigger the way that we think about, the way that we need to approach it. Maybe we're a lot more unique than we think in some respects.
Yeah, colours come into it a lot too, Ash, I find. When I was at uni, I relate to colours, because the problem that I've got is that most things that the world, about 95% of everything that's said's upside down to me, so I've got to do a conversion on everything. So it takes me a long time. So when I studied, I'd go through and study the books, and then I highlight everything with coloured markers.
Interesting.
So the headings or the paragraphs, they've all just highlight colour. You can flick through a book, just flick the pages like dozens and dozens a second, and just pick up a colour straight away. You won't pick up text straight away. So, and the guys that I studied with, they were amazed, because we were doing engineering, obviously, so it was pretty complex, some of it, and I could flick through and just nail a subject we were looking for, and that'd take them 2 hours to find it, because I just had everything color coded, and they'd say, how the hell do you do that? You don't need to know what it's about. You just got to pick up the color, and that jumps off the page at you see. Then you zoom in, and away you go. I found it, and I didn't learn that till I went to uni. There was not the majority, but a lot of people did it that way.
Interesting.
Yeah, So we sort of related to each other, and it helped in the study, as well. So we helped others because it was quicker. Because key these days, it's not always the knowledge that's the problem; it's the time factors at uni. So you've got to cover so much data in such a short time, where you can't be reading pages and pages and pages of text unless you can memorise it all. Some of them can, of course. Some of them can just read it once and memorise the book, but I can't do that. I need to go and look it up each time. So anyway, yeah, it's just another.
It is, mate. Do you know? Interesting you mentioned colours, because I think that everybody in the room probably needs a different chart colour potentially, and different bar colours.
Yeah,
you know.
Yep.
And that's even something to consider for everyone. I know you.
Yeah, sorry, you go.
Oh, so Jeff messes around with loads of different bar colours all
I do,
the time.
absolutely do. Yeah.
And it's interesting, interesting the way that we process. I've got black charts. I know that doesn't suit everybody. I saw George had white charts earlier. And I guess knowing which chart, even chart per color, it could be of benefit to people.
Yeah, well, the first thing I do when I set up a chart is I change all the parameters to suit my colours. So my volume, my MACD, my backgrounds, just the bar colours themselves, whatever. The moving averages have all got certain colours. So you can throw open a page, put a moving average exponential on it. You don't need to know where it is. There's just 5 colours, and the order of those colours tells you straight away. You don't have to look at it.
Yeah.
You don't have to look at it any closer than that. Just the fact of where the colours are on the page. Yeah, it's handy. It's for sure.
Yeah.
They say the colour red has got negative connotations. So looking at red candles all the time may well do.
Well,
and certainly if you're long, they will.
The golden arches. There's no mistake that the golden arches were yellow and red.
Yeah,
because red kind of makes you angry and a bit hungry, and yellow makes you really happy. So woo, happy eating.
Yeah, green does that too.
Oh, does it? There you go.
Makes
different
you happy,
sort of green.
For sure. Yeah, that's it.
We better leave it there, or we'll get into horrible trouble, I think.
All right. Yeah, I think you're right, mate.
Because I'll start singing, what's the name? Achy Breaky Heart. Or start talking about illicit drugs, which we can't be doing here.
No.
We better get out here,
mate.
right?
I will
hey,
meet
George,
you tomorrow, mate. I will try and remember. I'll put an alarm in my clock.
All right, happy days. When you're out and up and running, mate, that'll be good.
All right.
George, I'd really like to learn about your method of day trading when you get there, mate. That if we can catch up at some stage, that'd be fantastic.
Yes, definitely. I will definitely have a separate side session with you.
Brilliant. All right, should we get out of here?
Yeah, let's do it. Thanks so much, guys. Thanks, George. Thanks, Phil.
Thanks, guys. It's been great.
Thanks, guys. Catch you later.
Happy days all. Sorry for those of you who are looking for actual trades today. We spend a whole lot of time on psychology, but guess what? It's sometimes far more important than what the chart's doing. Have a great week. Catch you later. Bye.